Your latest crypto report noted that in the second quarter, crypto companies around the world raised $2.3 billion in venture capital across 371 investment rounds. And that represents a nearly 15% drop in quarter over quarter deal value and a more than 16% decrease in the number of deals. The report points out that this was the lowest amount of capital invested and deals completed since the fourth quarter of 2020. It also was the fifth quarter in a row of declining investment activity. Was this at all a surprise to you? I mean, I know in previous conversations we had, you said that you believed crypto will continue to drop in the first half of the year in line with what we're seeing in your new report. But do you think the trajectory will change course in the second half of the year like you had previously forecasted?
Yeah, so like we've been speaking throughout this year, Sally, I said that, investors have been focused elsewhere, AI, other areas of tech, but also, the crypto markets is still pretty challenged. And so we expected to see a decline in deal value throughout the first half of this year. Now, to answer your question, do we think that's going to turn around? And our answer, and we said this at the beginning of this year, is that we expect in the second half of 2023 is when we're going to start seeing an uptick in VC investments. And we still do expect that. And based on our conversations with investors, they've just been slowing down their investment pace, but they have been having conversations with a lot of different companies, a lot of different founders, and a lot of different teams to really understand what is being built out there. And now they're starting to get comfortable in understanding what the opportunities are out there. And so we do think that investors will become more comfortable later this year after having all those conversations. And also, we've spoken about this many times in the past. There's just a lot of dry powder out there for crypto VC funds. Last year, they raised over $25 billion, and that capital has to be deployed in the next 2 to 4 years. And it's been about a year already into them closing those funds. So they don't have a lot of time to deploy that capital. So we expect them to start doing that later this year.
Expanding on that, the report also points out that over the past few years, VC crypto investments have correlated with crypto asset prices with a lag of about 3 to 6 months. The report states that if crypto prices continue to move higher, then PitchBook believes VC investments could rise in the second half of 2023. But now that we saw crypto prices slide dramatically, is that what you're still forecasting? I mean, Bitcoin just experienced its biggest one-day drop since November of last year when FTX collapsed.
Yeah, so I don't think it correlates on a day-to-day basis, really. With I think you look at over a longer period of time. Overall, the crypto asset class has been up this year, and so I think that correlation is you're going to see it hit the private markets in the next few months. And we've been tracking this since probably like 2020. Historically, there wasn't really a correlation, but now because crypto is a pretty big it's an industry almost now, right? So there is a tighter correlation between what the public prices are and what VC investments are looking like. And you see this in traditional venture markets as well. The general tech sector, there's a correlation to overall VC investments. We saw tech last year had a very strong decline in 2022 in the public markets. And then there was also a decline in VC investments overall in 2022. And so in the crypto markets, you're going to see the same thing as well. And overall, Bitcoin, Ethereum, a lot of the large crypto asset prices are up this year. And we think that's going to carry over into the private markets later this year.
It certainly will be interesting to follow those developments. But your report says that blockchain infrastructure continue to attract the largest investments. Why do you think that is? And can you provide some examples?
Yeah, and this is kind of the common theme that we've been speaking about throughout this year is that, the underlying core. So we look at infrastructure under two buckets. You have the underlying core infrastructure. So you're looking at, the blockchains, the layer ones, the L2 scaling solutions, and those bridges and interoperable protocols. That is still fairly immature if you really think about it, because you look at how much even back in 2021, in May 2021, when we had very high usage on Ethereum, transaction fees were $10, $20, $30, $40, or even higher, a couple $100. And that's just not sustainable. So we still need the underlying core infrastructure to mature. And then also like the middleware infrastructure. So you can think about developer enablement platforms or security and compliance or custodians or a node and validated infrastructure providers. All of that is being developed too. So investors see that as the main opportunity right now is to get the infrastructure mature before, if we have a bull market, or when there are a lot of users that come into the space in the future, we have to be able to have the infrastructure to support that. And once that becomes mature, you're going to start seeing the application layer being built on top. And a good example of this is you look at cloud and mobile computing, right? That was the core infrastructure that had to mature before you can have an Uber and an Airbnb or any of those applications that came later. And so you're going to see this similar development here in the crypto ecosystem. And so a lot of investments are coming into the core infrastructure to make sure that that matures, but before later the applications can come and be built on top of it.
That makes sense. Thank you for that clear analogy. But the report outlines some of the mega rounds of the quarter, one of which Worldcoin's $115 million Series C funding round. What do you make of that funding round, and what do you think it signifies, especially amid the backdrop of an overall decline in investment activity?
It's hard to look at that single deal and says it signifies much about the crypto space. I think it helps to have Sam Altman as one of the co-founders, which you probably know is the co-founder of OpenAI as well. So I think that really helps. They are building something that, and we've published research about DePIN, decentralized physical infrastructure networks, and we classify WorldCoin as in that category as well, where you're using blockchain ecosystems to build out real world hardware or real world infrastructure. And as the audience, they don't know, WorldCoin, they have built out this orb to be able to scan irises to be able to identify a single person and being able to use the identity for a bunch of different use cases online. And so I think the deal itself is large, and it's unexpected because they do operate in the crypto space. But I think mostly just because they're building something that's unique, and there's going to be a lot of use cases for their infrastructure that they're building out, and then they have a very good founding team.
What would you say are some of the main takeaways of the report?
I think for the quarter, there were some really good developments, and there were also some challenges. And so it was a little bit of a mixed bag for the quarter. The biggest challenges is regulations continue to come into the space, whether it's regulators coming after Coinbase and Binance, or a bunch of different failures that are still happening as well. We saw Prime Trust, which was a Nevada regulated trust company. They went under. So I think there's some of those challenges, but there's also some opportunities that we see in the space.
Your research also features two emerging opportunities, one of which are stablecoins. Why does PitchBook believe that stablecoins present an emerging opportunity?
Yeah, definitely. I think stablecoins has been an opportunity that has, right now you have two of the biggest issues. You have Circle, and then you have Tether. But I think what's going to happen is there's going to be a lot of new players that are going to enter into space. And, we saw even Facebook a few years ago saw this as an opportunity, and they try to come out with, Libra or Diem. Obviously, there's a lot of backlash in Congress, and that's why they stopped doing that. But a lot of big players see stablecoins as an opportunity just because the way that the business model works is that it could be very profitable. And so, even just this past few months, we saw a couple new stablecoin launches. One from Aave, they launched their Go stablecoin. Curve launched their own stablecoin. And just very recently, we saw PayPal enter the space and launch their own stablecoin, issued and custodied by Paxos. And so what we think is that there's going to be a lot of different issues that come into this space with new stablecoins that are going to specifically serve their ecosystems. And so right now, we really see Circle and Tether as the two big players in the space, but we really think that it's going to change in the coming years. And there's been some really good developments too on the regulation front. We saw, just the past few weeks, we saw a stablecoin bill advance past the committee stage, which is the furthest a crypto bill has ever advanced in Congress. And then in MiCA, we saw, in last quarter, it got passed. They have a stablecoin framework in place, although the rules are a little bit unclear, but we think it's going to change before those rules have to take place next year. So there's on the regulation front, there's some positive news there, and then you also see a bunch of new players are coming in and issuing new stablecoins. So I think the market is going to grow much larger than it is today. Today is roughly, it's over $100 billion, but I think it's going to be a $1 trillion opportunity in the next 5 to 10 years.
Another emerging opportunity outlined in the report, maximal extractable value or MEV solutions. Can you explain what MEV is for those who don't know and why PitchBook thinks MEV solutions presents an opportunity in this space?
Yeah, so MEV is essentially the ability for block producers, which are miners or stakers, for them to earn additional revenues on top of transaction fees and block subsidies, which you get at each block that gets attached to a blockchain. And this is mostly done by reordering transactions. So a block producer can take a bunch of transactions in the queue, which is the mempool, and they can reorder and then they can extract a little bit of value out of that. And there's really two schools of thoughts for MEV. The first one is that MEV is part of the design of the architecture of a blockchain, and it can't be mitigated. And so we just have to create a fairer marketplace around it. And there's the other side of what people are thinking is that MEV is really harmful to blockchain ecosystems, and we have to find ways to completely eliminate it or mitigate it as much as possible. And so we don't really know which schools of thoughts are going to win out, but I think right now a lot of folks are in that first camp, where you have to create a marketplace around it or something to make it more fair. And Flashbots is probably one of the biggest players in this space. They just raised a $60 million round at a $1 billion valuation in this environment. And they're creating a suite of middleware products that help capture MEV and mitigate its harmful effects through an auction style marketplace for validators. And so that is where we're seeing a lot of the development. But there are also some startups that are building on the other side to help mitigate the harmful effects of MEV to users.
Now, recently, Bitco bucked the crypto downturn to raise funding at a $1.75 billion valuation. Does this signal anything in what we can expect in the next quarter?
Yeah, so I think we don't know the financial details of Bitco, but what I in this environment, when you're seeing a lot of these large valuations, especially for an exchange or a custodian, someone that has a pretty solid business model, you can expect that at least they're growing at a pretty good clip. So we're seeing some of these large outlier deals. Is very rare now, right? Versus 2021, when you're hearing, new billion-dollar crypto companies every other week. And so I think the ones that are getting the large amount of funding in this environment are the ones that are growing fast, getting good market share, and have very good, strong underlying business models.